All right, trade pros, good morning. Welcome to Morning Market Update for this beautiful April 15th. This is George Trade Pro Academy. Here I am in the office today. I'll probably be in the office for the next week or so. My wife's doing a training from home for her business, and we don't have two separate offices quite yet, home offices that is. So no one else is here. I'm safe. I'm still isolated, quarantined. I wash my hands. I don't touch my face very often. All right. I hope you guys are having a great morning. Let's talk about the markets today. We're seeing a little bit of a sell-off early this morning for a number of reasons, including some action around OPEC. And I'll leave that to Stephen to get into more detail, but I'll just cover it briefly. Today, I want to start out with a non-market fun fact. Oh, by the way, if you're seeing smoke here, it's a little Vitruvi, what is it called? Purifier, not purifier, but essential oil diffuser. There you go. So don't worry, I'm not on fire. I am. I'm bad hot. All right, here's a morning market not so fun fact. We haven't a morning market fun fact in a long time, and the first one now is a not so fun fact. On this day in 1912, early in the morning, all right, already past this point, a little vessel struck an iceberg around midnight in the North Atlantic. It was the Titanic, and it sank, unfortunately, killing 1,500 people on board. And the value of the company lost $2.6 million in total capitalization in the market, all right, after the ship sank and it wasn't insured, and there were a lot of casualties, leaving up a lot of liability. 2.6 million is nothing today. The Fed prints that in a second. But back then it was real money. And so, the reason I even bring this up is, first of all, the Titanic and the casualties and victims need to be in our thoughts. And on this day, especially. And more importantly, I feel like, less importantly, I feel like that's how the market is at the moment. It just kind of hit an iceberg at 2,800 even, and we're selling off that level. And I think, it's a good level. We've rebounded quite a bit, and I think we could see a little bit more downside for a second push to retest the low, maybe even fail of the retest of the low, and then rally back upward. All right. But I don't think that it's going to be a V bottom recovery back to all-time highs. I think that's what a lot of traders started to expect based on how it moved the last week and a half too. All right, so Bank of America released earnings today. Three banks had their earnings reports: Bank of America, Goldman Sachs, and Citigroup. So let's go through and quickly discuss. Srinivas, we'll talk about oil in a second. Oil is just puking, as it should be doing at the moment. All right, there's some news out of Mexico too. We'll talk about it. Give me a second. Bank of America first, Srinivas. Earnings per share came out at 40 cents, all right, versus an estimate of 46. Revenue 22.8 billion versus 22.91. It's not a terrible result. That's actually a good result from Bank of America. However, here's the thing about it. The loss provisions were $4.8 billion. Expectation of 3.93. All right, so we had 9 billion yesterday, and then another 4 yesterday, so 13. So far, it's $17 billion of loss due to COVID-19. Other areas of their business didn't do so bad. Net interest margin is up 2.23%. All right, charge-offs are also up, which is not good. And a lot of expenses and write-offs due to this COVID-19. So we're starting to see it show cracks through the earnings like we expected, especially in the banking sector. All right, Goldman Sachs comes out with earnings per share of $3.11 per share versus $3.35 expected on the consensus. Revenue exceeds the expectation, 8.7 billion versus 7.92. All right, also not bad of a result given the fact. But the provision for credit losses was $937 million. They're more of an investment bank, so they don't have as much exposure to retail. The one area that they do have a lot of exposure to is the energy markets. And they had a lot of loan loss provisions there as well. All right, so Goldman Sachs, not a terrible number, but not great either. Fixed income, commodity, and currency trading revenue is up 33% in this quarter, which is good. Equities revenue up 22%, and so they've offset some of their losses with rallies in their investment operations. So it's not a bad result from Goldman Sachs, but it is showing cracks once again. All right, didn't mean for that to be a rhyme like that, Dr. Seussian. Citigroup is the third one that released this morning, and the most recent earnings per share of $1.05. All right, revenue was 20.73 billion versus 19 billion. Net losses on credit is 2.1. All right, and their credit provisions is 7 billion for write-offs. So now you're looking at almost $30 billion lost so far in the banking sector alone on exposure to this COVID-19 situation, or at least saying COVID-19 is the reason that they're writing off some of their bad debt. And it makes sense. All right. People can't pay loans, and down we go. Here's the worry in all this. Banks, if you just look at the net number, they didn't do so bad, but it's 1/4 of the COVID-19 impact. And if you really think about it, right now is when it's starting to hit a lot of businesses more harshly. All right, I saw two businesses, one huge pizza. It's not a retailer, but they sold pizza in Toronto. That company shutting down after being in business for 60 years permanently. And they directly said, hey, no one's buying pizza. We can't keep this up. And so there is an impact in the economy, and I think it's starting to get felt right now. And so Q1, although it's not terrible earnings, it's actually good, and they set aside a lot of money for future charge and write-offs for their books, especially the banks. I still think that the economic impact is just starting to be felt. And so really Q2 is going to be the really, really interesting one, and the opportunity for us to either bounce back or it's going to get a little bit uglier. All right, so there you have it. 3 banks reporting. Stock markets are off their overnight highs. We're almost 100 points off the overnight high, and we are getting to the, we're below the prior day close. We're below 2 days ago prior day closes, and we're trading overnight lows at the moment. All right, that's how it goes. 2,800 to 2,050 is that level that we expected for it to retest and find some sell or overhead supply. There's a lot of people who haven't gotten out of the long trades who see this as a good opportunity. Just a couple weeks ago, you're down 36% on your portfolio. Now you're down less, and it's a good opportunity to get out if you wanted to. All right, in Asia, Japan's down 0.5%, Hong Kong down 1.2%, China down 0.57%, India down 0.8%. In Europe at midday, London's down 2.27%, Paris down 1.8%, Frankfurt down 1.92%. So losses across the board. In the U.S., it was down 1.68%. Now it's down more. S&P's down over 2%. NASDAQ the same. All right, so we're getting a little bit of a pullback to the upside momentum the last couple days. All right, and this is normal. This is what we expected. This is par for the course. Now the question is, will the sell-off be bought? Is the sell-off on low volume? Is it just weak longs getting squeezed out of the trade? Is it the retail positions that bought the market late that are getting squeezed out early? And if the answer to that is yes, then we should recover pretty quickly with some pretty decent volumes and pick up the pace to the upside. But if there's more people who get scared and put their shares for offer on the market for sale, we could be at the beginning of another push lower. I don't know if we retest those 2174 lows on the futures, but maybe 2,500 downside is a good retest level to keep an eye out on. Crude oil is down big this morning, down over 2%. The low of crude oil matched the low that was set, but when we broke the $20 a barrel marker 2 weeks ago before this OPEC deal, and as soon as that happened, Mexico comes out saying they're going to cut production by another 100,000 barrels. Initially, OPEC wanted Mexico to cut 400,000. They said, nah, it ain't going to happen. Let's do 100,000. Now they're increasing it to another 100,000, and so they're, Mexico's realizing, hey, we need to be part of this. We need to get on board because crude oil is tanking. Back below 20. All right, crude is just a way oversupplied market. I mean, you guys ask what's happening with oil. The same thing that's been happening the last month. Trinidad, the last 2 months, 3 months. Heck, you could even say the last 3 years. Oil has just been oversupplied. There's the capacity for production far exceeded the demand for it. And now throw in the next black swan, which is the fact that, this COVID-19 situation is happening and it virtually wiped out demand overnight. All right. So now you have a twofold factor. Nobody wants to buy crude oil, not as an investor, but if you're working from home, you don't need gas. If you're a company selling goods, you don't need to transport as many things. All right. And so the sudden evaporation of demand with a price war of oil that's already oversupplied, sends it to $19 and some odd a barrel. I think we get down to around 1580-ish level before we start to rebound. I think it's in for some new lows. You just got to stick with what's going on. Gold's down 2% this morning. So is Bitcoin. And, we're going to sell off in a lot of markets. People are cashing out, and that's okay. All right. This morning we had retail sales. They missed quite horrifically. The expectation was for minus 8%, but it came out at minus 8.7, worse than expected, but not as bad as the low end of the range, which was minus 24%. So, an 8% drop in retail sales is expected for the month of March. All right, which tells you, if you think about it, Tells you there's a lot of online shopping going on. All right. If you exclude autos, because no one's who's buying an automobile right now. No one. You don't need it. All right. If you exclude autos, it's actually minus 4.5%, which is pretty positive. But with auto sales, it's minus 8.7. So retail sales have gone down. I'll tell you though, I look at that number, it's not as down as much as you would think. All right. You would expect retail sales to be down much more than that. So I guess there is some silver lining in that number, still negative. And this morning, that number, along with bank earnings, isn't helping the situation. It's weighing down the market. We also had New York Fed manufacturing for April, and it came out at minus 78.2. That's the Fed survey, New York Fed manufacturing. That's a huge, huge negative number. The low end was expected at minus 60. So it far surpassed the low expectations of analysts. All right, so it's not a good start to the morning. Crappy economic reports and not so good earnings weighing down the market. And we're at a key resistance level where no matter what happened, people were going to sell some. And so now you're kind of meeting sell supply. Well, it's all supply is all sell side, right? You're meeting supply, which are sellers, a lack of demand, and some trickling out economic and earnings reports. And this is what we talked about, Market Analysis Live, last week, the week before. This is the true test for this market's bullishness of late. As you look at a chart long enough, and it ain't bullish at all. All right, 9:15, we have industrial production, which is in 3 minutes. 10 a.m., we have business inventories and NACHB housing market index. At 10 a.m. on top of the hour, we also have Atlanta Fed business inflation expectations. And at 10:30, we have Department of Energy's petroleum inventories. So it's crude oil inventory day. We're in 1 day, 1 hour of 1 day, you can make more money than a whole week's paycheck of whatever job you work. However, there's been volatility all around. So that's not as exciting of a statement anymore because you can pretty much do that on a daily basis in these markets. All right. So that's what we got here. Oil traders, energy traders. This morning, you got a key report. Yesterday's report wasn't so good at 4:30. Today, you got some more numbers coming up at 10:30. And equity traders, the sell-off looks pretty decent in size. Let's see what a rebound looks like. Yesterday, we said look for a little sell-off in the morning and then try to get them long, and that panned out pretty well. Today, I think we get a little bit of more of a dump, and we see the bulls come in. Let's see what they got. All right, there's some levels you got to watch for that are key, and if you flip above them, you could look for the long side. At the moment, they'll stay away from the long. All right, just because it's cheap doesn't mean you should buy it. You're not buying a bag of chips. You're not trying to get a consumable product that's going to be worth the most when you pay for it. You're getting an investment. All right, so if it's low, there's a reason it's low. So be careful trying to get it here just because it's sold off. All right. So that's what I got for you guys. Mike, I don't have one source. I read a lot of different news on a regular basis, not just for the morning. But we also have a news squawk service that kind of, you can hear it right now, I think, that they talk out the news, have a calendar, they have analysts you could discuss with. And that's a service they actually provide to our subscribing members for half price. All right. All right. We love you guys, and be safe out there. I got to flip it over to Steven because he's got to talk about oil. There's a lot of volatility going on in the morning, and he's going to give us an oil update. Trade Pros, we'll get started in a moment. YouTube, I love you guys. Be good. Stay safe. All right. And, manage your risk out there because I think it's going to get a little bit more wild this morning. I think the downside could really open up today. Love you guys. Be safe. And I'll see you tomorrow morning for the morning market update. Take care, YouTube, and all the best. Ciao. Trade Pros in the room. Let's get this. Let's map out some levels and some trade ideas on oil and the S&P 500. And let's plunk some trades in and do well. Yesterday, we had a great day in the room. Nice high percentage of people are profitable today. Let's do it again. So let's start off the analysis with Steven, then we'll send it back and do some equities. Vicky, I'm going to need you to host Boxy because you signed in before me. Oh, I'm the host. Wow. All right.